Hi, this is Jim Merrion with Get Real with Blockchain, and I'm here today with my co-host.
I'm Anthony Meisner as well, and Jim and I have been doing this podcast together for a few years. Kind of started back when Bitcoin blew up in 2017, and we've been speaking all over the place. We have a wonderful, fantastic guest here, Elliot Eisenberg, and he's going to talk with us a little bit about his perspective from the financial markets. He's a well-renowned economist that speaks all over the place. So, thank you for joining us today, Elliot.
My pleasure. Great to be on. Thanks for the invitation.
And we'd like to pull up now on our screens, Anthony, if you do the honors of the email. Elliot's famous for sending a 70-word or less email out every night on the state of the economy. And Elliot blasted everybody with one last week regarding his take on the cost of cryptocurrency. And that got us all talking a little bit about our agreements and disagreements with that position. So Anthony, if you're able to share that, that'd be great. But I'll just basically read it for the folks at home. So last week, Elliot mentioned that the cost of cryptocurrency, basically his concerns with it was that Bitcoin processing consumes staggering amounts of power, and due to slow and expensive transactions, its utility as currency is nil. Moreover, with central banks now focusing on Gov-Coins, crypto will never replace real currency. Furthermore, crypto is way too volatile for institutional investors. Finally, the constant launch of new crypto undermines the case for any. Cryptocurrencies have turbocharged blackmail and ransomware. Bitcoin is 12 years old and struggling for purpose. So, heck of a lot you said in that brief little email. Is you're always a master of condensing big topics into little. So kudos just on the work it must have taken to edit that one down.
I got to chisel away a lot of words to get down to 70 with like 4 or 5 comments. It's not, thank you.
Yeah, so would you just expound, for a minute, a little bit more on what you meant with all that?
Sure. I mean, I think Bitcoin comes back in 2009. It starts out, if I'm not mistaken. The famous Mr. whoever Satoshi Nakayama is comes out in 2009 and says, hey, this is a cool idea. Yeah. And he introduces to us at that time, although we didn't really know what it was, blockchain at that time. And I have nothing but great respect for blockchain. I think blockchain is the coolest thing in the world. It should do worlds of wondrous, phenomenal things for all kinds of markets in the economy and reduce transactions cost wildly. And firms all over the globe are starting to use it in all kinds of purposes in really cool ways. So kudos for that. I love it. But Bitcoin is 12 years old. Bitcoin is the best known. There are hundreds. I own actually one Litecoin that went from $360 like 2 weeks ago to $180 overnight.
Congratulations.
And I obsess about this one coin because I can. It's purposeless, but whatever. But Bitcoin's 12 or 13 years old now. And I don't really, look, something comes on, sure, everything has good and bad things. Nuclear power has good and bad. Money is good and bad. Everything is good and bad. Internet's good and bad. But I'm not convinced I see literally what the good is from Bitcoin. Can you make money at it? Yes. You can make money betting on ants. So I'm not convinced that the ability to bet and trade it is necessarily, I mean, it isn't awful, don't get me wrong, but there's got to be something more that some product or service creates that benefits the world in some way. Mm-hmm. And this is my biggest complaint. I don't know what it is. It's introduced us to Bitcoin, to blockchain, wonderful, fabulous. But we're done, finished, goodbye, we're over. And now it's getting somewhat valuable. The combination of Ether and Tether and all these other types of coins that are out there has, at its peak 2 weeks ago, was worth a couple $1 trillion, right? This was real money. So it could begin to have some really negative impacts on the U.S. economy or the global economy, conceivably, if we can borrow against it. So it's encouraged ransomware. We know that it's made ransomware really easy and non-traceable. Yeah. If that's the best you can do, I'm just not enthusiastic. And there's this other notion that I think the big notion is, oh, we use it as a counter to government coins, to banknotes, because we don't trust government. They're going to debase the currency. There's going to be inflation. Our dollars are going to be worthless, or yen or euros or whatever it is. So this is something better. I'm left really wanting on that argument. The dollar is a pretty solid thing. And now people are trading Bitcoin into Tether. Oh, the stable coin. That's a new one. There's stable coin.
Yeah.
What solution does stable coin offer? Nothing. It's the same like 100 years ago when banks used to issue their own money. but you didn't know which bank really had the money behind the money, the gold behind the money. So you had to find out which bank really had the gold behind them and only take their banknotes, literally banknotes.
Yeah.
So stablecoin is now recreating a problem that we solved 100 years ago. So I am aghast at the expense and the cost of Bitcoin mining continues to increase. Yeah. The more Bitcoin there is, and the transaction costs like $20 a transaction. This is prohibitively expensive. So tell me I'm wrong. Explain to me where I've messed up.
Well,
what I missed entirely.
So it sounds like, I mean, just like our show is called Get Real with Blockchain, where, that's at the end of the day, what we really find valuable is this whole idea of blockchain. And so we're not disagreeing with you. I think if you had to take one of two things, cryptocurrency or blockchain, I think there's more, value over long term with just what blockchain can do in a variety of different usages. But, I think when it comes down to kind of this idea of Gov-Coins, and I read something that 85% of all central banks are researching actively Gov-Coins right now. I remember like 2017 when Anthony and I were first kind of meeting our minds together about this. We were talking to somebody who was working with the Saudi government back then on trying to get the petrodollar thing, gone, with it. So there certainly is something in this space with government coins coming in, but we kind of view it as a chicken and egg problem. We've spoken at these conventions for, cryptocurrency early adopters, and they're the very last thing that you would have for a government regulated type of replacement for fiat currency. And so, the question is, how do these countries, like Tether pegs their value to the US dollar, right? A stable coin. So, these governments are probably going to have to peg their value to something. Maybe they do that same US dollar, peg, or maybe they do some gold standard. Who knows? Talk about regressing, right? So, but you've got that, and then the early adopters of cryptocurrency are in some cases anarchists, and in most cases they're libertarians. They're definitely against government regulation, and politicians love regulation. So it seems to be a massive conflict with how to get these coins even started when the very people who would probably adopt them in the first place are going to hate the very concept of a government-run crypto.
You saw that with China, right? China last week said basically no crypto for a whole bunch of reasons. One, they don't want people to be able to do whatever transactions they do, nefarious stuff. And then they also said, it's a lot of the bogus reason was a lot of energy. Yeah. I'm not convinced that was a fig leaf, a meaningful fig leaf, but a fig leaf nonetheless. And the other thought I had was, we love that Bitcoin is volatile. This is an asset. This is a valuable part of what it brings to the table. If you can buy it low and sell it high and do this periodically, this is exciting. You can make money trading Bitcoin. Mm-hmm. But if it becomes a really legit currency, then its volatility will be much reduced.
Absolutely.
And then no one will want it because you won't be able to make any capital gains on it. It'll be much more hard to play.
Yeah.
If it's successful, it becomes unuseful, and as long as it's not useful, it's unsuccessful or whatever. But you get.
But that's where like those institutional investors, are, the idea was, of course, that they all come in, they stabilize things, but just by their massive holdings, and they reduce that fluctuation. As any kind of technology in its infancy has a lot of ups and downs. Then the institutions come in, just like the internet did, with the .com era collapsing, and then everything else being built in its ashes. Cool. So I think that was the idea, but I'm sure that a lot of those institutional investors got the pants scared off of them over the last week with, these ups and downs for sure.
As they should have.
You have to be careful. I mean, if you want to invest in this stuff, you have to be very careful, know what you're doing, and be able to lose the money if it's a short-term investment. You're there for 10 years, whatever. Or it's 1% of your portfolio, fine, or 2%, sure. But don't bet the rent. Don't bet the kids' college money on this.
Yeah. And just one more follow-up question kind of to what I was talking about, and Anthony wants to talk about some specific cryptocurrencies and how they're actually, not garbage. But, the other thing is just that you talked about China, for example, and the real problem I see with any government having a cryptocurrency that's successful is they're conceivably storing every transaction their citizens make on a blockchain. And can you imagine the power that gives then governments to, just mess up people's lives? Because I was just thinking, like, my own business, you know, is a real estate business. I mean, I'm a S corp. I've got transactions I do, you know, every day. And if I had somebody who had a record of every single one of those, at the very least, they can make my tax day hell, right? You know, for no reason other than they can see all these things and start asking questions about all these things that are benign. So I can't even imagine if they had like a police state like China suddenly, like, you know, doing that to all their citizens for every transaction. And they've got citizen scores, you know, their social, you know, kind of score. So now you factor in whether they're a good consumer or not. I mean, it seems to me that governments are their own worst enemy with trying to launch something that can be stored as a record on a blockchain.
Well, there's no question. My concern is all your concerns, and I add one more.
Okay.
If the central bank decides to have negative interest rates, they can take your Bitcoin, they can take your Gov-Coin away from you every year. They take 1% away of whatever you stash away because they want you to spend it. So they have a tremendous amount of power. Monetary policy becomes even more powerful with such a device. And that does trouble me. There's no question that Gov-Coin brings some really very negative consequences to it.
Yeah.
Maybe we want to hold cash at that point. Maybe we want to hold Bitcoin. I don't know.
We're going back to the gold standard, Elliot.
I'll be honest there. I'll put it out there. I'm not a big fan of gold either, and that maybe pollutes part of my thinking with Bitcoin in general, right? These are non-interest bearing assets. They don't increase labor productivity. They don't do anything. This generally, as an economist, doesn't make me very happy. We're investing in things that don't do anything. It's purely a speculative venture or some store of value. And we can argue about the store of value. I'm not sure it's a great store when it fluctuates so much, but certainly it is some store of value. There's no doubt. I'm pessimistic to neutral, I guess, is the best way I could be. And maybe I will when we have this Gov-Coin in the US and they start taking my money away at -1% a year. I'll be calling you and saying, hey, Jim, Anthony, tell me, how do I buy some Bitcoin?
Well, you're all over the Litecoin, so you got it covered.
I got Litecoin, yeah. I have a wallet now. I have a wallet, right?
Very cool. Yeah, we love it. I did want to ask you a little bit more about monetary policy while we're on the subject. My biggest concern about all of these, you know, centralized bank currencies, and I think the big adoption, it's really easy to see what the benefits of Bitcoin are, right? They're peer-to-peer transfers, it's fast, it's, you know, it's really easy to use, all those things.
Expensive.
Why would they give up? Yeah, why would they give up their ability to do the things they can with monetary policy now to move to something like a centralized bank coin? I mean, if they're going to go to a peer-to-peer system and there's something that they can't adjust on the back end, or maybe they're going to keep it to where they can just print more money at a will like they can now. I mean, that's the hard part, right? Is how do you get the adoption from the Bitcoin community, which likes the fact that it's, you know, there will be no more, right? It's fixed. They have all those kind of things.
Max, yeah.
But how do they get the utility from these?
Well, they won't. I don't see the Gov-Coin really as being anything similar to Bitcoin. I think the only thing it has in common is the word coin. Government's going to treat monetary policy essentially the way it does now. They'll lend money to banks. Banks will create money and there'll be inflation. The central bank will aim for 2% inflation with the new Gov-Coin or Fed coin or whatever you want to call it. It'll just be electronic so that as I reach for my phone, you know, we'll be able to make transactions using our phone right away very easily, bypassing arguably the banking system, and have an account open with the central bank conceivably or something. It would lower transactions cost. It would allow the non-bank to suddenly become banked very easily. You wouldn't have to have a bank account to have banking services, which is valuable, but it'll have much more control over our lives. But it will not be in any way a competitor to any of these cryptocurrencies. It'll just be virtual money that the government issues essentially, and it has the full faith and credit, whatever that's worth, depending on who you are, of the central bank.
So Elliot, one quick follow-up question on this. What does the consumer see to gain from moving to this Gov-Coin rather than US currency in that place? Because it's essentially would replace what we have now.
Yeah, if you think of cash at one end of the continuum, right? Then you've got a credit card. Like, we don't hold cash anymore. My wallet has no money. You know, I have a couple of credit cards and that's a few bucks to pay the doorman, and that's about it. So we're moving on this continuum from a cash society to a cashless society as technological innovations improve. So this is what we're gonna go to next. You can't lose it. It won't get burnt in a house fire. You won't misplace it. There'll be all kinds of safeguards that the government will have in your account and protecting you from loss and being pilfered and all that kind of stuff. So it's a little more secure, a little more convenient, and there's no transaction cost. You don't have to open a bank account and have $10,000 in the bank account to get free banking services and all the ways the banks screw you with ATM fees and using the wrong ATM and taking out more than $200 in 2 days or whatever these stupid things that banks steal money from you with, essentially. Mm-hmm. So it'll be less expensive to use. So that's a good thing. And the credit cards are expensive, right? Everybody hates credit cards. I mean, I love it. I get 2% cash back, but the vendor hates it, and everybody has to make a cut along the way. So the transactions cost would drop like a rock. MasterCard and Visa go away. I mean, maybe. I don't know. They might not. They might lobby to change the rules, whatever. But the transactions cost would be phenomenally lower. So it would be the blockchain benefit without the crypto volatility.
Yeah, the volatility is definitely the problem, which is why people don't use it even around the world when it's a better replacement than, their Venezuelan dollar or something, right? Because that's the real problem.
That's a great example. Okay, in cases where you have hyperinflation, absolutely, moving to anything is better, right? Yeah.
Right.
But some of these places won't let you get US dollars or euros because the central bank and the currency and exchange rates. Then going to Bitcoin, whatever it is better than keeping your Venezuelan cruzeros or whatever it's called. Yes, so there are some rare cases that absolutely it's an unambiguously a good thing.
So we were talking specifically about a line in your email that said that the constant launch of new cryptos undermines the case for any. And what Anthony's going to focus on in a second here too really is about how we think it's more of like a marketplace of ideas example where you have a lot of spaghetti being thrown at a wall and only some stuff's going to stick. Back in the .com era, Yahoo didn't make it, even though everyone thought they were going to be the bee's knees, right? There's companies like that, there's technologies like that look great on paper, but once a billion people start using it, it all falls apart, right? And so we really were thinking that while there are a lot of junk coins out there, a lot of stupid ideas with the cryptocurrency, there's certainly that marketplace of ideas is going to find the ones that have utility, that benefit people, that reduce costs, like you were saying, that provide noticeable benefit for all users. And we think that there's at least a couple in the marketplace that have some legs to it, right, Anthony?
Absolutely. Yeah. I wanted to talk to you a little bit more, just to kind of bring it back to real estate, into the blockchain side of things, which we're very passionate about. I mean, that's the whole reason we're even talking about blockchain and Bitcoin and all this stuff, is because of the utility in the real estate market. Stuff like Ethereum and Cardano, stuff that actually are platforms in order to help build things.
Yes, absolutely.
Yes. Ethereum has like a money purpose to it, right? But realistically what it is it's a way to source and store ideas and syndicate that information. Do you see that any of these currencies that a government would they use some other blockchain, or are they going to want to hold their own just because they want to own the information?
Oh,
I think that's the.
Sorry.
No, I totally agree with you. I think they would probably hold their own. But what I don't understand is when you have other cryptocurrencies that are able to communicate with something like Ethereum or Cardano, and now you could have your own banking system free of regulatory problems, free of like the second these government coins come out and there's real issues in the world with them, and they start, like you said, taking money away from your account every year, which is very possible. Why would they at that point not go to something like, call it Bitcoin because it's the biggest, right? It's easy to talk about, where it can communicate with Ethereum, and now you have multiple blockchains speaking to each other, which is something that we've never seen before, and it's definitely coming, right? That's basically
that was
what we're working on most.
There'll be this evolution of ideas and something's going to win out. And maybe, I don't say this in a negative way, maybe in 5 years or 3 years or 6 years or 10 years, there's something really bubbles up that's an immensely useful thing like Ethereum. That really could be, right, a building block of all kinds of useful things that people are already building on, right? Ethereum is a basis now
right.
for a bunch of things. The other one you mentioned I'm not familiar with, but I gather it's similar to Ethereum.
Very similar, same developer. He's locally from here, but they're today the 4th largest currency in the world. And when Jim and I spoke with him at a convention, they were like barely hitting the radar in 2018. And they're just brilliant minds trying to do the same thing as Ethereum, but more efficiently, right? So that was one of your big concerns about Bitcoin, is the efficiency.
Yeah, and the efficiency, and there's the different ways you measure it, measure of work versus measure of effort, or I forgot the lingo exactly, but there are cheaper ways.
Proof of work versus proof of stake.
Right, and Bitcoin has the more costly approach, and the newer ones are going to have a better approach. So maybe Bitcoin kind of goes away, or other ones become cheaper transaction costs. I mean, you're right. This is a 12-year-old thing or a 13-year-old thing at this point. So give it 2 or 3 or 5 years. Money didn't develop overnight either. Maybe I'm being too critical too quickly in the process. My mind is open. I'm prepared to be excited and interested about this for a while.
Well, the other thing too, I mean, with those two things, it's about lowering transaction costs and lowering, the cost of, the energy requirements and things like that. And they both do much better than Bitcoin. But, the one thing that, the U.S. government right now has massive, power with is just the fact that we control the dollar and we can manipulate the dollar. And moving to blockchains, essentially creates a barrier to manipulation, at the very least, if not stopping manipulation. So I kind of just wonder how, in general, a massive superpower like the United States, I can see why Venezuela would just want to say, let's outsource this whole thing. This is crazy what we're doing to citizens, and I'm tired of being, having a coup every month kind of stuff. But, when it comes to like the very, largest superpowers, why it almost seems like they're giving up some control by, if they did move to then a Gov-Coin that would be on a blockchain that'd be immutable, essentially.
But they'll run it. It'll be run through the central bank, right? That's the issue.
Yeah.
So that's how they'll operate it. So they're not giving up control. They're actually going to gain more control because, as you said earlier, they'll know where you spend every dollar, every way, and every dollar in every situation forever.
I was just thinking about
every day they'll take 1/365th of your money, 1/365th of 1% out of your account every night to pay for that 1% a year of central bank negative interest rates, or 2% or whatever it ends up being.
I was just thinking about, like, how do you dump an extra $1 trillion into an economy?
They could instantly put into our account.
Yeah, I guess so.
Just everybody gets $100 per person, or whatever the math works out to be, right? Very easy to do monetary policy. It's getting easier now with this last couple of times with the stimulus checks. Just you wake up one morning, you open up your bank account, and you got $100 or $1,200 or whatever it is. They'll do the same thing, but they could take it and give it and do all kinds of crazy things with it. So it makes me nervous. But yes, transaction costs will eventually come down. Hopefully that will make something really valuable and useful here. But I think the governments will try very hard to cut them off at the pass too.
That was one of the last questions we had for you. We've seen throughout the years of looking at this and being in this field, so much is due to government regulation, right? As government regulation kind of shifts, and if they really do truly shift that direction, do they just put the kibosh on this and they just crush the current cryptocurrency markets, or are they becoming so valuable that they have their own vested interests outside of just collecting capital gains taxes all the time? Because they are, right? They're making plenty of money for the government that way. But how do they really determine what is what, and how do they really kind of incentivize all of this to grow, rather than like China's done, where they've just shut it all down?
I'd be very surprised if government closed it down. I think there's much too much now. There's options trading in futures markets in Bitcoin, and there's all these different wallet companies. Coinbase went public last month. There's lots of them out there. There's people are now holding Bitcoin as an asset class. It's become an asset. Crypto is now an asset class. That's for sure. I might not think it's a great one, but that's besides the point. There are people who do it. So I think the lobby. I think the cat's out of the bag. So I don't think that no one's going to go backwards in a Western country for sure, and disable it, if you will, through legislation or regulation. No, I think it's here to stay. But by the same token, they're making it a little difficult, right? And every transaction now is a taxable event. This is just painfully annoying. Every time you buy and sell crypto, you have to have a ledger and keep track. You have to have some software that keeps the track. So you have this huge thing at the end of the year of your capital gains and losses on crypto. It's annoying. Yeah. And they'll never give it currency status. It's just not going to get there legally.
Yeah, why would they? Then they lose their way to tax it.
Right, that too. Right. Although they want to make you able. They want to collect taxes on it. Absolutely. But it's here to stay as an asset class, like gold is. Right. There's no question.
Okay.
Silver.
Well, yeah. Well, Elliot, we're approaching our time right now that we're up, but we wanted to give you a minute to talk a little bit more about yourself. And, we find your information extremely useful and valuable. And, we'd love to spread the Elliot Eisenberg gospel a bit and plug you a bit. So please let the folks at home know a little bit more about, you and how you can, spread the word.
Well, thank you very much. If I haven't annoyed all your listeners with my negative comments about Bitcoin in particular, but I love blockchain. Remember, I'm positive on Ethereum too. So I'm not all bad here. Kidding aside, I put out 70 words every day on economics. No graphs, no ads, no charts, no links, and no photos. The best way and easiest way to get it is to text the word bow tie. One word, bow tie. One word. No hyphen, no space between the words. Just one word. String, 6 letters, bow tie, to the 5-digit, 5-character number 22828. Bow tie to 22828. You'll then be prompted for an email address. You'll hear from me every day. You cannot unsubscribe. I'm lying, you can. But again, bow tie to 22828. I look forward to having you as a reader. I try and make things interesting and varied and so on and so forth. There are all kinds of different stuff every day.
And, Elliott's also really great with coming out across the nation to, well, now that COVID's starting to go away, I'm sure we'll get more in-person meetings again. So you might be lucky enough to catch Elliot at an economic summit in your town as well. So absolutely. So
come see me.
It's always entertaining when he's in town. So appreciate it.
You're very gracious. Both of you are very gracious. It's been a pleasure to be on your show. It's been a fun give and take, and I appreciate. I really do. You can hear I'm maybe optimistic is maybe a little too optimistic, but I'm rooting for you guys here.
Oh, thanks.
Thank you, Elliot.
We hope your Litecoin becomes much more valuable in the future too.
Thank you very much. Thank you.
So once again, everybody, this is Get Real with Blockchain, the podcast focused on cryptocurrency and blockchain technologies and real estate. I'm your host, Jim Merrion, realtor with Coldwell Banker in Colorado, and you can always give me a call at 303-548-0243 or shoot me an email to jim@ourcoloradohomes.com.
I'm Anthony Meisner with Land Title, and you can always catch me on my cell phone as well if you have any questions about any of this stuff at 303-968-9868. We'll catch you on the next one.
Thanks, Ed.